If you have property in the US or you intend to purchase US property, you need this episode about how to save US taxes legally. In this episode with Sally Gimmon, and she is the representative of a private law firm that helps save you tax. And also, she is the founder, she is the owner of thetrustisyou.com. So, first question I have is, how can entrepreneurs save US taxes legally?
Property Wealth Strategies podcast with Lily Patrascu shares world's most influential property investors, sharing their strategies for making money with property.
First off, thank you for having me, Lily. But with the Spendthrift Trust, it's legal. It's in the IRS tax code 643B. It's been in front of the United States Supreme Court on 2 separate occasions, so it's as legal can be. If you are an investor in the United States, or if you are a foreign national with property in the United States, I have 5 Canadian nationals who, one of my clients has 4 apartment buildings in the Chicago area, but she lives in Toronto. She gets to save all her American taxes. And then with the Spendthrift Trust, your information is private. And more importantly, all lawsuits become frivolous and go away. So if someone trips on the ice in front of her apartment building, she has some liability, for have the insurance on the house with liability, but no one can sue her for $500,000 or anything else like that, because all her assets are in the titanium vault of the trust.
That is so interesting. Tell us more about what entrepreneurs should do in order to start protecting their money so they can save so they can save tax.
Great question. My personal story, if you don't mind. I started real estate investing in 2018 when my mom got sick. My mentor, Jay Tannenbaum, taught me how to wholesale 7 properties in 2019. I made great money. I paid off $184,000 in debt. I was a rock star in my real estate group. I knew about capital gains. I had $50,000 sitting in my bank account. What I didn't realize, in the United States, there's 4 ways to file your taxes. Single, most expensive way. Head of household, married jointly, cheapest way, and married separately. And then there's 7 different tax brackets. My CPA called me April 4th of 2020 to say, congratulations, Sally. You made so much money. You went from 22% tax bracket to 24% tax bracket. It wasn't congratulations. I owed $97,000 in short-term capital gains to the federal government. If you remember, April 4th, 2020, it's the start of COVID. 3 of my properties didn't pay me on April 1st. I'm in a money crunch. And, I drove out to his office to sign paperwork to get on a monthly payment plan so I can pay my bill with the IRS. Signed the paperwork, got my parking validated, go down to the parking garage, and I literally cried for 20 minutes. I'm like, I thought I was doing everything right, and now I'm in debt. Drive home. My mom, who's Irish, my aunt Kitty in Ireland, always made a comment: sleep on it. When you have a problem, sleep on it. Have you ever read a book called The Power of Your Subconscious Mind by Joseph Murphy?
No.
It's an older book. It's a great book, but he talks about how your subconscious mind can give you solutions. So I go to bed. Next morning, I wake up at 5 a.m. and I'm like, I read an article about the Rockefeller Spendthrift Trust. How can they save taxes? I spent 5 months researching this. In September of 2020, I became a representative of the law firm. I started both my business and my beneficial Spendthrift Trust. The business trust is to help U.S. Business owners and anyone making 1099 income to save federal and state income taxes. But the beneficial trust saves the following 5 taxes: short-term and long-term capital gains. Short-term, a year or less. So if you wholesale, you fix and flip, you do auction houses, tax liens, or crypto or Forex investing. Again, if you have crypto in England, there's different laws for you in England, but if you have real estate in the United States, you'd pay the short-term capital gains. Long-term capital gains are a year or more. And if you're selling an investment property, a business, a baseball card, they're either 15 or 20%. If you don't mind me going off on a little tangent, there is passed legislation, November of 2021, 2 major bills went through Congress. One was a transportation bill. The second bill was a catch-all. And in line 21 and 22, it says if you make more than $300,000 a year, it doesn't matter if you have short-term or long-term capital gains, you will pay 40% on your profits. So if you sell something for $100,000, you're going to pay the federal government 40%. And then there's 7 states, California and other states, that have state capital gains. With the Spendthrift Trust, all of this is, you don't pay it. You file a 1041 tax return, and you save the capital gains and interest income. If you have like a passive investor, I have notes where I'm the paper in the house. People pay me their mortgage or seller financing. You will save rental income taxes if you have short-term rentals like Airbnb or vacation rentals, 5 doors, 10 doors, 20 doors. Maybe you have apartment buildings, multifamily. Maybe you're doing commercial property. I have several clients who do Airbnb arbitrage. I didn't know you could make such great money doing Airbnb arbitrage, but they get to save rental income taxes. And besides, you can put a property that has depreciation or cost averaging into the trust and continue doing that. But after that, you never have to worry about that again because you're saving so much money on your rental income taxes.
Wow, that's fascinating. So, how can entrepreneurs get started to set up this kind of trust? Is it hard to maintain, and do you have like running costs for it?
It's not hard to maintain. My personal story, excuse me, when I started in September of 2020, I had 6 notes and I had a servicer who was processing the notes. It did take 2 months because they had to send signed letters and get them back, because only thing my 6 they never knew me who my 6 people were, but they had to know there was a new bank account to pay. So there was a little bit of time lag there. But with the law firm, there's an entire team that works with you to answer your questions and help you. As soon as you pay for the trust, you get a new EIN or employee identification number, your tax ID in the United States, a 12-page letter to take to the bank to open up a new bank account. And you will shut down your LLC, S Corps, and C Corps because that's statutory law or state law. So what they do in Arizona and now that I live in North Carolina, they're different laws. And anyone can go on to the Secretary of State or the Corporation Commission website and research LLCs, S Corps, and C Corps. 40% of them in the United States get sued. If you don't mind me telling you a true story, my real estate group in Phoenix, the gentleman who ran it shut down 14 LLCs. He was smart doing that, getting his property into the trust, but he kept his S Corp open. He had several Airbnbs. I don't know what happened, but one of his guests from his Airbnb found his S Corp and sued him for $1 million. It was outside of the trust, and he had to pay that $1 million lawsuit. And he's like, you told me, Sally, to close it down. And I'm like, yeah, you can start building business credit with your new EIN. But it's amazing.
Thank you. So for entrepreneurs who already own property in the US and their property is not in a trust, what is the process to transfer the properties from, let's say, your own name to the trust? Is it hard to do it, and will you have to pay capital gains tax when you do that?
It's not hard. My first property that I put into the trust was a bank-owned reverse mortgage auction house. I bought it in July of 2020 for $20,000, and I was told it was going to go to auction for $50,000. Middle of COVID, not sure how long it was going to wait, but I knew that $30,000 spread in between where I don't lift a hammer or have to do anything. At 24% tax rate, my capital gains would be $7,110. So I started my trust in September. After Labor Day, I honestly Googled how to do a bill of sale. I've never done one before. You can do them easily on PayPal or Google. So I did one bill of sale saying Rocky Mount, North Carolina. I'm in Phoenix. Rocky Mount, North Carolina is in Sally's Real Estate LLC. She's selling it, giving it to Sally Gimmon. And then the second bill of sale said Sally Gimmon is giving Rocky Mount, North Carolina to XYZ Spendthrift Trust. I drive to my bank. I had to get them notarized. As my banker is notarizing it, I had $10 in my wallet. I handed it to him. He put a note into his notary saying $10 for consideration. You have to have some form of money for consideration, but it doesn't tell you if it's $1 or if it's $100. But my $10 paid for it. I drive back home. I'm in Phoenix. I scan the 2 documents to the attorney in Raleigh, North Carolina. The next day, the attorney in Raleigh, North Carolina, emails me and goes, "Can I have your first page of your trust?" Send that to him. Again, this is a bank-owned reverse mortgage auction house, so it took a while. When it finally went to auction on August 28th, 2021, it started at $50,000. It ended at $64,000. I have to look at my notes to give you the right numbers if you don't mind. It ended at $64,326. Woo! My kind of real estate investing. I personally made $44,326 without lifting a hammer. I don't want to fix and flip. It's not my idea of fun. But more importantly, I didn't have to pay on April 15th of 2023 $10,368 in short-term capital gains because it was in the trust, and I used that money to buy even more real estate. So it's an amazing thing.
Thank you. So let's say that you manage to transfer the properties that you currently have or the properties that you're going to buy into the trust. What stops people from actually suing the trust? For example, let's say you have the same Airbnb situation that you talked about earlier, where the person was sued for $1 million. What stops them from suing the trust for $1 million and still
Great question.
Getting that?
One of my clients, his name's Patrick. He's in Chicago. When he started the trust, he had 100 doors in Chicago. Now he has more. I don't know how many more. He's in my national real estate group. I was sitting next to him. This was back in 2001. He was fuming because one of his renters in Chicago, the dog got out and bit the mailman. The mailman hired an attorney, found 4 of his 100 LLCs in Chicago, and the mailman made $400,000 in liability. I'm like, Pat, we're there for 3 days, and I'm telling him about the Spendthrift Trust. He buys the Spendthrift Trust. He puts all the real estate into the trust. This past summer, in July of 2024, he has an RV. Knowing Patrick, it's $250,000 RV. One of those big, huge RVs that things come out. He couldn't slow that down for traffic. He hit the car in front of him that pushed her into the car in front of her. They get out to exchange information. His insurance card shows the RV is owned by the trust. His Illinois driver's license shows Patrick's name, address, all his information. 6 weeks after the accident in September, he gets a $500,000 lawsuit because a woman saw this expensive RV. Doesn't know how rich Patrick is, but she thinks she's going to make money off of him. He calls me. He's livid. He calls me and says, "What do I do?" I'm like, "Calm down. You have the name of her attorney." He's like, "Yes." I said, "Take the first page of the trust, fax it to the attorney, and just say, 'I'm sorry, all my assets are in the trust sheet.'" He's got insurance on the RV. There's property damage and personal injury on the insurance. His insurance rates might have gone up, but she couldn't get the $500,000 from him. He's like, "This is amazing. I didn't know I could save so much money with the Spendthrift Trust." So that he saved a $500,000 lawsuit. That's how powerful this is.
So why did this strategy work actually? Why? Because she was still kind of able to connect with the insurance of this guy. Why did that work actually?
Correct. So probably, and I haven't seen his insurance papers, so I'm making assumptions here. Probably his RV had, let's say, $100,000 per person, $300,000 per vehicle for personal injury. I'm assuming. I don't know. And they were, as Patrick says, he was going less than 5 miles an hour because he was slowing down for traffic. And he's just like, if she had whiplash or something else, that if there was nobody else in the vehicle, the insurance company would pay for her to go to physical therapy, pay for her to get an X-ray, things like that, out of the $100,000. That's on the motorhome insurance or the car insurance that would be covered. She's thinking, I have to tell you about Patrick. Patrick has a gold little pinky ring, has a Rolex watch. So she's seeing a guy with lots of money. She thought she was going to make money off of Patrick, and she got better. Her car got fixed, but she wasn't going to make extra money off of him.
Thank you. Now tell us about the Airbnb situation. So let's say where you said that guy had to pay out $1 million because his Airbnb property was not in the trust. How would this work out if it was in the trust and someone, an Airbnb guest tried to sue, or, the same mailman situation? How would that have worked out for the trust and saving that kind of money?
If I can tell another story, another client of mine, Brandon, if you know the Mayo Clinic, it's one of the top hospitals in the United States. In Scottsdale, Arizona, there's a Mayo Clinic. His sister is a real estate agent, and she found him this beautiful house, less than a mile from the Mayo Clinic, $1.4 million. He uses it as an Airbnb if someone's, they're getting, people can walk to it if they want to walk in 110-degree weather, but it's close. Over Memorial Day, which is the last weekend of May, he's down in Rocky Mount, Mexico. He's having fun. He gets a text saying, "My daughter rented to your Airbnb. I tripped and fell, and I broke my ankle. I'm putting a mechanics lien on your house." So she's at the house in Scottsdale. She knows the address, and a mechanics lien goes on to, like, when you try to sell it, you have to pay off the mechanics lien. He calls me from Mexico, and he's just like, yikes. I'm like, find out who her attorney is, and same situation, it goes away. Well, Brandon's a very curious individual. Brandon starts researching the woman who sued him and the attorney from California who sued him. She sued 6 other Airbnb hosts in California, Nevada, and Arizona in the first 5 months of 2023. And she put a mechanics lien on every single one of those Airbnbs. He's like, I mean, I don't mean to say maybe she did break her ankle, but every lawsuit had it. But there's people out there who are trying to rip off people who are successful. And this is how the trust saves you, like that.
Thank you. But what I'm trying to say is, like, in that situation, so the trust didn't have to pay anything?
Exactly. So again, when you have your insurance on the home, the $1.5 million home, when he has his homeowner's insurance on there, he might have liability insurance. I would highly suggest to have so if she really did trip and fall, I think it was a complete fake person, but she would have money for that. But she can't put a mechanics lien. She can't put she can't get any money for off of that home, even though she sees how beautiful the house is and knows it's worth so much money.
Thank you. Wouldn't that have an impact, though, on the insurance, that the liability insurance that person has, in terms of, like, getting an increase right after there was some sort of claim?
It could be. And this is what I followed up with Brandon, and he's like, she didn't make a claim. She wanted to put mechanics lien for on the house so she could get money out of the house. It was how do I say this? It was a fake claim that I guess she got his cell phone from Airbnb, and she was just trying to make a quick money. Hey, this guy has this expensive house. Let me make money. She never, he has all that paperwork at Airbnb saying if there is a claim, this is how you make it. She never proceeded with the claim.
Wow, that's fascinating. So one of the biggest benefits of putting your assets in a trust is actually reducing the likelihood of being hit with a ton of lawsuits that bankrupt you. Okay, so tell us about what are the most common misconceptions about avoiding taxes legally in the US?
The biggest question I get, people are very nervous about putting an asset into the trust. They're like, I can't get the asset out. I moved to North Carolina because when my mom got sick here, I bought that reverse mortgage bank-owned property, and I found out a secret about North Carolina. Do you do any tax liens or foreclosures, go to auctions?
No.
Any place else in the country, you go to the auction, you win the house, you pay for it today. So if you and I were in Phoenix and you and I were up against each other for an auction house, you pay $10,000, it's your house. Here in North Carolina, there are 101 counties, and you have to know if it's 10 business days or 10 calendar days. So I came out here Christmas of 2021. My mom's still in the hospital. My brother and sister-in-law have a nice house in Union County, 1 mile from Mecklenburg, where Charlotte is. Charlotte's one of the largest cities in North Carolina. In Union County and in another county next door, Carabas County, it's 10 calendar days. My contact at the clerk of the court here in Union County, her name's Christy. She's like, Sally, I only have a high school education. I know how to count 10 days. If it falls on a Saturday or a Sunday, it goes to Monday. We laugh about this. So over Christmas of 2021, I won 3 separate upset bids where, let's say you won the house for $10,000. I have to go in person and pay $10,750, and now it's my house, and the window of 10 days still go. So I'm here for Christmas. I wholesale all three properties. And my brother's like, did you rob a bank? Where are you getting all this money? I'm like, I'm wholesaling. And because it's in the trust, I didn't have to pay any taxes on it. I'm not trying to crow Lily, but since I started this trust in September of 2020, I've wholesaled 28 properties. That's short-term capital gains. I have 12 notes where I'm the paper on the house. People pay me their mortgage. That's interest income taxes. I have 3 rentals. I don't like rentals because they can call me at any time. I'm not paying taxes on that. I have a crypto bot, which is also capital gains. I don't pay taxes on any of my real estate investing. And I've done tax. I have several tax liens too.
Thank you. How easy is it to withdraw the money for your personal use from the trust so you can actually live on that money?
Great question. When I opened up the bank account at Wells Fargo when I was in Phoenix, because I have family living all over family living all over the world right now, I want them all to be beneficiaries. I got a debit card from Wells Fargo. So I had opened up both the business and the beneficial trust. So I asked them to give me different debit cards. The red debit card is for my beneficial trust. The blue debit card is for my business trust, so I can keep track of it. I can go to an ATM, withdraw money. I can Zelle money on my phone or on the computer. The money's there. I just want to say this real quick. I go to 5 different counties in North Carolina and deal with tax liens and foreclosures. When I sign my name Sally Gimmon, TT, trustee of the trust. That's how I get the property into the trust. And then when I wholesale it, let's say I'm wholesaling it to you. I bought it for 5,000. I'm wholesaling it to you for 10,000. You pay my bank account. You've got my account number and routing number. I save the taxes, and then I transfer the paper over to you.
Okay. What about if you want to use the money for something else, like normal shopping and stuff like that? How easy is it to use it?
You've got the debit card. You'll do that. Only thing the beneficial trust does not pay for, I'm getting into the weeds, but I want to be honest about this. The only thing it does not pay for is personal food, personal fun, and personal fashion. So my car, nothing special. I bought it in 2015 for $27,500. I shouldn't tell you this story. September of 2023, I'm driving from one county to another county. I pull over and I only have my debit card to do real estate because I've got a lot of money in that account. I pulled over to get gas, run in to use the bathroom, and my favorite donut, a cake, yellow cake donut with chocolate icing and hundreds of thousands on top of it. I don't need this stupid donut. I have the wrong debit card for that donut. So I buy this $2 donut, eat it, and I don't need it. And then when I did my taxes for 2023, 2022, I use Quicken Books, so it's in Quicken Books, so I can transfer it to the CPA. And he's just like, "You're really claiming a $2 donut?" Like, yes, I'm claiming a $2 donut. So he was going to take it off my car because I'm still using that because I do have the business trust to pay for my food, fun, and fashion.
Thank you. So how complicated is it to, once you set up the trust, how complicated is it to actually use it? You are going to need someone like you to kind of regularly manage all the different complexities of like every purchase and what you can and cannot do. How complex is it to kind of start learning enough to be able to manage the situation with ease?
Great question. There's a reason why we have an entire team from the law firm to work with you. Julie is a person who'll get your EIN and a letter to go to the bank to open up the bank account. Anna Maria's team. Anna Maria will not talk to you until you sit down. You're going to get a PDF copy, and then 3 days later, you're going to get the actual trust in the mail. She's going to contact all my clients. She contacts my clients and say, "I want, if it's a husband and wife, or if it's two different people, or just one person, I want you to get a pad of paper, sit down, and read from the first page to the last page, the whole trust. Write down your questions, and our first meeting is to go over everything." She does this with all the clients, and most of my clients, within 2 months, they know exactly what they're doing. They've been walked through everything. Their questions have been answered. We're still here to help them, but you don't buy it and just go out into the weeds. I don't want to say this negatively, There is a company here in the United States who also sells the beneficial Spendthrift Trust. There's other companies, and I get clients who call me going, "How do I use this?" I'm like, "I don't know your trust. I can't really answer questions. I haven't read your trust. Here's just an overhead. I can tell you about it." But these people have spent thousands of dollars and they don't know what they're doing. It's kind of sad. And it's sad how they function.
Thank you. How expensive is it to kind of hire you and your team? Because the thing I'm concerned about is, for example, even in the UK, I think a typical lawyer, hourly rate tends to be like anywhere from 400 to perhaps 800 pounds an hour. So I wonder how many hours would someone need to invest in order to start to learn enough that they feel, okay, this was kind of like a worthwhile experience.
Great question. This is why I have my free class on the Great Discovery. They can go out there, get a 23-minute presentation. They'll get 3 articles from Forbes magazine. I did not write on the trust. They're going to get 2 pages of case law so they can research the trust, and then examples of clients. One-time cost for the trust, it's $20,000. 5 years from now, 50 years from now, you never have to do it again. The law firm I work on behalf of was started by Paul Benson, a Harvard law professor who wrote 5 separate trusts. We're just talking about the beneficial trust right now. In 77 years, not a single trust has ever been audited. They're so confident they give you a certification saying if you use the CPA we introduce you to file your taxes, they will defend you free of charge. One trust was examined by a senior IRS agent back in 2018. He flew down to the Houston area where the law firm is, spent 5 hours in the boardroom going over everything. He approved the trust. 2 weeks after the meeting, he sent an unsolicited letter to the law firm saying, "Here are the tax codes I use to approve this trust." If anyone needs this information, again, it's on the Great Discovery, that letter is there. I want people to research this. If someone goes out and researches tax code 643B, which is the trust is under, they will find an opinion letter dated September 18th, 2018 from the IRS. It literally says the IRS does not like this tax code and they do not defend the irrevocable, complex, discretionary, non-grantor spendthrift trust. It's their opinion. Only Congress can change taxes. The IRS cannot. I'm not trying to be political, but Donald Trump, he's coming into office. His father started the Spendthrift Trust back in 1972, and that's why he doesn't pay taxes. Other famous people, U.S. presidents have it, senators, Congress people have it. I hate to say it, the tax code, the United States tax code, is to affect the middle class. The rich know this is the secret of the rich, and then the middle class are the ones who get taxed so much. I'm not trying to crow, but I just talked to a 26-year-old guy who last year made $150,000. With the business trust, we're going to save him $34,392 a year. And he's just like, I need to get this trust. I mean, that's what some people make alone that they're paying in taxes. And again, I'm not trying to crow, but one of the deals I did here in North Carolina, after COVID got lifted, they started doing the upset bids again for foreclosures. I happened to walk into Union County Courthouse, and it had gone for 4 days before COVID, so there was 6 more days left, and they needed $159,000. I didn't have it, so I called one of my clients who just he has a trust because he inherited his dad's stock market portfolio, and I said, "Don, do you want to go to a deal with me? I need $159,000 wired to me within the next 40 hours. He's like, what are we doing? And I'm like, we're going to wholesale 5 custom houses. And he's like, okay. So he wired the money. I did an upset bid. I won it. These 5 custom homes were in foreclosure with Bank of America. I won the bid. It's $3.3 million. When I won the bid, I contacted the person who was in charge and I said, give me 4 weeks. I just won this. She's like, you have until July 1st. I'm like, okay. This is it was the Tuesday before Memorial Day weekend is Friday, Saturday, Monday. This was a Tuesday before, so it was a little bit crazy time. My friend, a real estate agent in the neighborhood, I said, I'm going to put these 4 houses to an open house. there were these beautiful custom homes that still needed a little bit of work. Two of the houses didn't have concrete for the driveway yet, things like this. So I'm just putting these houses up on the market at a starting point. I'm going back to my slide so I can tell you the right numbers. So forgive me to do this. So we had to change the locks. We paid the real estate agent 2% on her commissions. She made $95,300. She bought the trust so she could save the money. And then we paid off the bank the $3.9 million. And between Donna and I, we split $1,361,200 in profits. So my take at $680,200, I used 24% because that was my tax rate when I started the trust. I saved $163,248 on that one deal in 3 weeks. I mean, that's how powerful this trust is. Don, who's saving it because he's in the stock market, he too saved that money, and he's just like, I need to become a real estate investor. I'm like, work with me. We've done a few deals since then, but that was just a one-off amazing deal that we did together.
Thank you. For those entrepreneurs that are newbies to the US, would you recommend that the trust would, for example, buy the property initially, or that the entrepreneur buys the property in his or her name and then transfers it to the trust? How would it work?
Quite honestly, I wouldn't buy it in my own name. I would buy it in an LLC, make it a little bit hard. If something happens, like let's say you're living in England and you buy a tax lien in Florida and someone trips on the sidewalk, you don't want them to come after you directly. So buy it in the LLC, and when you start making some money, then switch it over to the trust. Just to give you an idea, there's 7 different tax rates. So if you are making $50,000 profit, I'm going to 10% on $50,000 profit, you pay $5,000. At 12%, the tax rate, you pay $6,000. My previous tax rate at 22%, I would pay $11,000 on that $50,000. 24%, I would pay $12,000. If you're making a lot more money at 32%, you would pay $16,000. All the way up to at 37% would be $18,500. I mean, that's just $50,000. Last year, I wholesaled 7 properties. I have 12 notes. I have 3 rentals. I have 3 seller financing houses. It's an amazing thing. If I can give you some other figures, I'm sorry, I'm giving you all kinds of figures, but I just did a seller financing house, or no, a subject to house. I made $145,000 on that one deal. At 24% tax rate, I won't have to pay $34,800 April 15th, 2025 on that one deal. I mean, that's a lot of money to be saving.
Wow, that's fascinating. Tell us where entrepreneurs can find you and more information about the trust.
I appreciate that. My free class is my first name and my last name on www.sallygimmon.com. It's a 23-minute presentation, 3 articles from Forbes magazine, 2 pages of case law and examples. I do a live, if you're on LinkedIn, I do a live every Monday at 4 p.m. There's actually, when you sign up, you get a Zoom link for it. On LinkedIn, send me a message. I'm on Facebook. I'm not on Facebook that much, but I do pay attention to things. My goal in my national real estate group that I'm in, the average person who joins the group is a 56-year-old gentleman who's trying to make some money before he retires. If you wholesale or you fix and flip 2 properties and make $50,000 on each one of the properties, so $100,000, you're going to be you'll pay off the trust. And if you do, like I did, 28 properties in under 3 years, I've paid off the trust many, many, many times.
Follow me for more property wealth strategies.